All right, let's have a quick look now at ETFs, and to discuss, Marc Jocum from Global X ETFs joins me in the studio. Now, you're looking as well at the copper price movement, which has been on a big tear. Tell us what we've been seeing and how that plays into the ETF space.
Yeah, definitely. I mean, copper prices has been the talk of the town over the last couple of weeks. Obviously reaching new all-time highs that took out the previous all-time highs back in June 2022. Reaching $11,000 US dollars per ton, or $5 per pound. And what's really exciting is, even though it's reached its all-time high, on an inflation-adjusted basis, it actually hasn't reached the peak that was reached back in 2011. So there still could be plenty of room to move, like about a 20 to 30% gap. But it's really been driven by a few key factors. The first one is just around the demand and supply deficit that's currently there at the moment. Basic laws of economics. At the moment, there's a few supply challenges, there's shortages. Some of the smelters are facing a bit of a tougher time from a margin perspective and are forced to close. And it takes around 15 to 20 years for a copper mine to actually come to production as well. Just on top of that, there's just been so much growing demand. It's a really important part of both the social and technological infrastructure that we're going through right now. From a demand perspective, there's just going to be a consistent move, and we can talk about some of the key drivers from an electric vehicle and renewable energy perspective. But also there's just been a lot more confidence in terms of economic growth. And what you're seeing is, because we may have potentially a soft landing, what happens with copper is, once the purchasing manufacturing index prices rises into an expansionary phase, copper prices is a bit of a proxy. They call it Dr. Copper for a reason. So normally when that happens, when it reaches its trough and goes back higher, you normally see copper prices rise by around about 20 or 25%.
So it looks like there could be quite a lot of upside then in terms of investment opportunities, particularly, as you say, renewables, electric vehicles.
Definitely. And no matter what way you look at it from a renewable energy perspective, whether you're looking at solar panels, and if you look at like a solar turbine that requires around about 5 tons of carbon per megawatt, or you look at wind power as well, which requires around 10 tons per megawatt, it's going to consistently move. Same in renewable energy, and when it comes to the electrification of vehicles. Electric vehicle requires around about 4 times the amount of copper as an internal combustion engine. So no matter which way you look at it, the renewable energy movement that's triggering is a huge tailwind for copper. And another tailwind, which is becoming a lot more focused as well, is AI. So artificial intelligence, a lot of people are wondering, how is AI relevant to copper? But it's around the data centers. At the moment, these data centers only account for about 1 to 2% of electrical production globally. But considering that 1 gigawatt from a data center perspective requires 65,000 tons of copper, and that's going to continue to increase as more AI applications come to market, there's so much room for the price of copper to grow further, and it's a great way that investors can get exposure to this
metal. Exactly. How do we get a piece of that pie?
Yeah, so naturally Australians tended to get exposure to copper through some of the miners over here in Australia, but they've only got a small allocation, and BHP has been a lot in the news recently because they are trying to bid on the envy of the industry, which is Anglo-Americans.
The deadline's coming up.
Coming up very soon. I think today is where it's going to happen. So we'll see if their bid goes through. But a great way that investors can play it is by actually diversifying it into a broad suite of copper miners. So we've got an ETF, the Global X Copper Miners ETF. The T code for that is WIRE, WIRE. I love a good ticker. We've seen a lot of popularity in this product. It attracts the leading 40 copper mining and exploration companies in the market. We've seen a lot of money coming into the fund. Around about 15 million has come into the product so far this year. But I actually think Australians are under-allocating at the moment to copper. If you look more globally at some of the global ETF flows, around about $800 to $900 million has gone into copper ETFs. So I think Australia has a little bit of catch-up to doing, a little bit more of a catch-up to go, but there's plenty of ways that Australian investors can access it in a more diversified and low-cost way.
And what are you seeing in terms of positioning and flows? Like, Australians are kind of beefing up their interest here.
They are, definitely. And it's funny because a lot of people think that a lot of the money going into coppers is actually driven by institutions as well. And you're seeing institutions actually betting that the copper price is going to go a little bit higher. So there's more in the industry, it's called more longs than there are shorts. And on the shorting side of things, we've actually seen a little bit of it's called a short squeeze in these markets, where a lot of the institutional players who were thinking copper prices might actually go down have been forced to close out their position by buying more of copper, which has really seen this huge elevation in price. So we're seeing both demand from an institutional level and also the retail level, which is shown by some of those ETF flows coming into the market.